It's Friday, July 10th. I'm Brian Walsh, and welcome to This Week in Impact, where I talk with ImpactAlpha journalists and editors about some of the most interesting impact investing stories we've been covering. This week, I'm joined by editor David Bank. We'll discuss Al Gore built a movement and investment thesis around climate change. Now his Generation Investment Management wants to write sustainability into the code of AI itself. Plus, closing the gender gap to ease skill shortages in Latin America's mobile workforce. And finally, this week's deal spotlight shines on CalPERS-backed Inox Clean Energy, which got nearly $74 million in new funding from an Indian family office to ramp up its renewables development. That's all coming up on This Week in Impact. Hi, David. Welcome back to the podcast. How was your semi-sesquicentennial weekend?
Well, I'm back in California, and I don't feel a day over 250, Brian. And I think of it as bi-sesquicentennial, as we've discussed before.
Very well. All right. Well, now I understand the team's been working on our next Agents of Impact call happening Wednesday, July 15th, with a panel of faith-based impact investors. How is that shaping up?
Yeah, it's interesting. The point, I think, is that there's something like $12 trillion in faith-based funds. Almost all of it, to the extent it's even mission aligned at all, is managed with screens, with negative screens that take out things like firearms or tobacco or what have you. And the push is to say, hey, there's a purpose to this money, and could we deploy it to advance human flourishing, as the phrase goes. And so we have Terry Keeley from Impact Evaluation Labs has helped us pull together quite an impressive group of folks to take on some of these questions of how do you actually think about the purpose of faith-based capital. It's going to be quite an interesting conversation.
All right, look forward to that. Again, that's Wednesday, July 15th. We'll have a link in the show notes for more details about how to register and sign up. But first up this week, Generation Investment Management, the firm Al Gore co-founded, is treating AI the way it once treated climate, as a systems-level risk and opportunity that demands sustainable foundations, from energy and data governance to equity and access. ImpactAlpha's Amy Cortese spoke with Generation's Lila Preston, who co-heads Generation's growth equity strategy, for a piece this week about how the $33 billion fund manager is pushing to put sustainability and AI on the same stage. Now, David, we also had guest pieces this week from Anthony Buglevine, Florian Kemmerich, and Randall Zindler on similar themes. Generation is calling AI a systems problem on the scale of climate change. What does that framing actually mean for how they're deploying capital?
Yeah, it's interesting. This kind of investment category is really taking shape quite rapidly, as I think everything in AI world does, which is that it's not some tangential or marginal concern now of AI sustainability. Sustainability is actually sort of core to the success of this entire kind of economic transformation that's underway. And it's not just the water use and the electricity use of the data centers, which folks know. Of course, that's important. But really, sustainability means things like understanding data privacy and the way that the large language models get developed, the sovereignty of nations. And essentially the agency of humans and users. And so all of those things are going to be what determine whether this AI transformation really lives up to the hype in terms of changing the way that the global economy runs. Generation Investment Management, as you say, kind of made its name on the inconvenient truth about climate change. And so the inconvenient truth about AI, as we have these $1 trillion IPOs and this sort of frontier model race to dominance, is that these kind of concerns about sustainability, as I said, broadly speaking, are really essential to the whole build out. And they've got an investment thesis around it, and there's a growing number of fund managers and LPs who are saying that this is actually where the real money will be made, but also the real impact will be had.
Yeah, it seems like we're in the midst of this great transformation, right? The world that we knew before AI is in the past and isn't coming back in all likelihood. And the future of the kind of bright, abundant future that boosters claim that artificial general intelligence might come about is still some time in the future. And we're in this kind of messy middle period where we're in this transformation, we're in the midst of this change, but we don't know exactly how it's going to play out. And so there's a role there for folks to really get involved from a sustainability lens, from an impact lens, to really kind of shape how this tech is developed and how these companies are incentivized to ensure that, good positive outcomes are part of the story.
Yeah, I mean, I think it almost comes, it's almost existential in a certain way. Like, what is the purpose of AI? As you said, we don't know how it's going to play out, but it's not just something that happens. It's actually a whole set of choices around how systems are designed, how they're deployed, who controls them, who owns them, who benefits them, and what they're kind of optimized for. And that is being essentially hashed out in real time without really much in the form of public policy. It's really being hashed out almost at the corporate level, at the customer level, and the notion is that you can actually influence those directions with investment dollars. And this is what Anthony Bug-Levine was trying to point out: is that there are very targeted ways in which you can talk about, sort of worker voice in the deployment of AI. The Florian Kemmerich guest post talked about, thinking about human agency, or what they call vocational agency, as a key factor. When you're thinking about the jobs question, for example, the whole issue is whether you're just going to replace human labor or whether you're going to augment it, and whether you're going to actually use AI as a way to allow people to do more and maybe even earn more in their jobs, because they'll be kind of supercharged with AI capacity. And so there's, again, these kind of design choices that are really, up in the air right now, are not just something that might or might not happen. They're actually a result of kind of all this intention and I would guess agency, which is becoming the key word here. Who's in charge, and who has power or influence in this evolution. And again, we think, and a growing number of investors think, that you can actually steer that in a way, with the investment choices you make, with the startups you back, with the ways that you influence the governance of the AI companies themselves. A whole bunch of issues that do come back to investment and finance in some ways, and at least that's one lever that could be possibly pulled to sort of influence the direction.
Yes, Amy highlighted in her piece, you mentioned the word agency. She said, agency and sovereignty as antidotes to concentration and displacement are emerging as powerful investment themes. And she quoted Al Gore, who pointed to the fact that the Global South receives just 2% of AI investment, and that AI models are largely trained on Western data and languages, leading to what Gore called an exotic form of colonialism.
Yeah, I mean, that's kind of in the sovereignty bucket, and there's a whole bunch of issues around that, in terms of, like, as you say, how the LLMs, the large language models, are created, who has compute capacity itself, to the extent that your whole economy is running on it. Do you want to outsource that to a few global giants, especially if they're not, in your country, or you have no control over them? And we've seen already people start basing their entire business, not to mention their entire country, on these providers, and then all of a sudden the token costs become astronomical. So there's a whole bunch of questions, like I said, of control, of system design, of affordability, of access, of privacy, of security, of auditing and assurance, all of those things that have been seen as like either impediments somehow, or slowing down innovation or something, but they're now becoming actually the way in which the whole technology gets shaped and deployed. And we've seen that these kinds of design choices, we've seen it in social media, we've seen it in software itself. The way these design choices get kind of coded early on, has a big influence on sort of what the social implications are down the road.
Yeah, and I like how ImpactAlpha calls its coverage of this kind of responsible or sustainable AI, quote, shaping the algorithm.
Yeah, and the algorithm, sort of broadly or metaphorically speaking, which is the whole system, as we said. It's that there is kind of a machine being built here, and it's got multiple layers. We call it, people think of it as the stack. It's all the way from the infrastructure itself, the literal data centers and racks of computer servers, but it's all the way up into the governance and data privacy and all the other levels of it. And folks really have to sort of dig in and get comfortable, with that technology stack and with investing across the stack and with this intention around human agency, human flourishing, sovereignty, and what have you. And I think that is kind of coming together much more quickly than we might have expected, as everything happens at sort of warp speed now.
Yeah, and the opportunity to give AI a purpose here, right? That if you can kind of effectively apply it in the right ways to a range of challenges, energy, transportation, food systems, the like, you name it, those benefits could outweigh the costs that AI is certainly, putting a strain on water and energy systems and the like.
Well, again, yeah, there was this study, as you mentioned, from the Grantham Research Institute on climate change, that the benefits of AI, in the sense of optimizing all those systems you mentioned, could outweigh the costs in the sense of energy and water use. And again, that's just a set of design choices that are made of what this technology is going to be used for. And there's no one who can dictate that AI should be optimized for this sustainable future. But on the other hand, it's kind of incontrovertible if we're facing a climate emergency, a biodiversity emergency, an income inequality emergency, and we now have this super technology that can actually think through the very complex, solutions to those challenges, that we should, as a kind of species or a civilization, deploy this technology against those challenges. And how that happens is a very interesting question. It's not, as we see right now, primarily going to be a public policy question. It's going to be a kind of a market question, and in that market, investors may have some role to play.
Yeah, at my old company I used to work for, when we talked about the culture of the company, we talked that you either have a culture by default or a culture by design. And I think when we're talking about the kind of systemic impact of AI, we either have that impact by default and just let things happen, or investors and others need to step up to design it for the outcomes that we seek.
There you go.
All right, well, you can read Amy's piece, Generation Investment Management Seeks to Stamp AI with a Mandate for Sustainability, and the other guest posts about this topic on ImpactAlpha.com. There's also links in our show notes. Later in the show, we'll discuss the nearly $74 million investment into the Indian energy company Inox, which manufactures solar modules and cells to help build out 11 gigawatts in clean energy capacity. But for now, we'll take a quick break. When we come back, in Latin America's mobile workforce, women are everywhere in the field, but almost nowhere in the top-paying technical jobs. A new report asks why. Next up, across Latin America, women are out in the field, delivering goods, installing solar panels, providing community-based services, and keeping infrastructure running. Yet, as ImpactAlpha's Eric Stein reported this week, jobs with the highest pay, technical certifications, and supervisory responsibility remain overwhelmingly male. Eric covered a recent report commissioned by the Bogota-based Alive Ventures, which looked into this gender gap and the implications not only for the women, but also for impact investors in the region. David, what were some of the key findings of this report?
Yeah, I thought this was just a great example where, doing the right thing also has, real business benefits. And essentially, what the report found was that you have lots of women on frontline jobs. They're talking specifically about the mobile workforce, and that's, people out in the field, building infrastructure, delivering things, installing solar panels. And it's interesting, in light of the AI conversation, there's actually a very big skills shortage, a shortage of skilled workers in a lot of those kinds of fields. And then on the other hand, women are underrepresented. So the notion is, if you could bring women's representation up, you would also have impact on this skills shortage. And then the question is, well, how do you do that? And it turns out that the solutions are, the things that folks know about, but, that you need to have, flexible work schedules in terms of childcare and elder care. You need to have transportation ventilation. You need to have protective equipment, helmets, and uniforms that fit women or that are designed for women, and that those very simple things can help women, move up the chain, and also, by the way, earn higher pay and be able to take care of their families. And then, of course, you have to deal with, the, still, chronic problem of just, sort of gender bias. And so there are ways that you can kind of mask the gender of job applicants so that folks don't get caught in those kinds of traps. And so again, being gender smart in all those ways, has real benefits for your workforce, your skills, and then ultimately for your customers and growing your business.
So that points to ways to remove some of those barriers affecting the women that would help the portfolio companies that employ those women. But what's the role for investors in all of this?
Well, I think it's making sure that that the managers that they employ, are thinking this through, and then for those fund managers, making sure that those portfolio companies are thinking through this and doing these basic things. So the role of an investor in a company often is to say, hey, have you thought about these very strategic improvements you could make that would really improve the bottom line? And you can have gender smart investors playing that role with those operating companies, because in many cases these operating companies are not either gender aware or even impact oriented. They are solar installers and other kinds of things that are just trying to get the job done. And so say, hey, you maybe haven't thought through all the gender implications that could also improve your bottom line.
Right, and there's also an impact measurement and management kind of angle to this, because the report highlights the fact that companies need to look beyond just the headcounts of women and look a little bit more detail at where they work by job, pay, and the level of responsibility to see where they are impacted on the career ladder at these companies.
Yeah, and this is not just a Latin America thing, although we ran it out in our Latin America newsletter this week. It's a human capital question across the board, and the SEC last year had started to issue rules around human capital disclosure, which would have gotten into exactly those data points that you said. It got held up or rescinded under the current administration, but a lot of states are actually thinking this through. And again, as you say, it lets you see where there's pay gaps, where there's skills gaps, where there's other kinds of fall off in gender equity, and again, not just for some kind of woke ideology, but for optimizing the workforce for the kinds of jobs that need to get done.
All right, well, you can read Eric Stein's piece on closing the gender gap in Latin America's mobile workforce on ImpactAlpha.com. There's also a link in our show notes. For now, we're going to take one more quick break. When we come back, our Deal Spotlight looks at the latest round of funding for CalPERS-backed Indian renewable company Inox Clean Energy. Finally this week, we shine our deal flow spotlight on Inox Clean Energy, the Indian renewable energy business backed by CalPERS, which received a nearly $74 million investment from an Indian family office this week. David, tell us more about the company and why this deal caught our attention.
Yeah, I learned a lot from this story, because Inox is building out one of the largest kind of solar operations around, and it's doing it from its base in India. So interesting that that's not China, for example, but also doing it in what's considered an integrated way. So they're building out a huge solar module manufacturing capacity, and then they're also building out solar assets, deploying solar assets. So they're essentially their own customer, and I imagine that takes care of a lot of customer demand issues. And thirdly, they're about half of their solar module manufacturing capacity is now based in the U.S. And I think the prevailing wisdom has been, the U.S. has lost the solar race to China, and all the solar cells are going to be built in China. Whereas Inox is doubling down on building out in the U.S. So for a bunch of reasons, this is an interesting play to watch. The last part is that CalPERS, the big California Public Employees Retirement System, I think the largest pension fund in the U.S., is a big investor in Inox. They were part of a $345 million round just in January. So Inox has raised another chunk now, but and that has fueled this kind of roll up or this acquisition strategy that they've been on, and they've been buying up both manufacturing capacity and also portfolios of deployed assets. So they're both a solar manufacturer and a solar installer or solar developer.
So how does this support CalPERS' overall kind of investment goal of putting $100 billion of assets into climate-aligned investments?
Yeah, CalPERS, maybe it's the California thing, as we've talked about. They've stuck with their climate investments. Others have backtracked in various ways. They had $100 billion investment goal by 2030. They're somewhere north of 60% already, and Inox is just a part of that, but it does show something of the strategy, which is, as I said, U.S. based manufacturing, integrated manufacturing and deployment, and then just this notion that there's going to be some big corporate winners in this clean energy race, and that they're going to be global, they're going to be diversified. You want to have a stake in them as the electro states, instead of the petro states, start ramping up.
All right. Well, to go deeper in this deal, there's a link in our show notes to the CalPERS profile on ImpactAlpha Edge, our data intelligence platform that contains the most comprehensive database of impact investors in the world. You'll find thousands of LP and GP live profiles detailing allocations, funds, asset classes, geographies, investment focus, and key decision makers. But that's going to do it for this episode of This Week in Impact. Thank you for joining me today, David.
Pleasure as always, Brian.
And thank you all for listening. This Week in Impact is a production of ImpactAlpha and part of the ImpactAlpha podcast network. Smart conversations by and for impact investing professionals. For exclusive stories and insights about the world of impact investing and sustainable finance, join thousands of other agents of impact by subscribing. Just go to impactalpha.com/subscribe for full access. Thanks, as always, to our producer extraordinaire, Isaac Silk. For David Bank, I'm Brian Walsh, Managing Director of the impact advisory firm Human Nature. We'll see you next week for more Impact.